Hey there everyone, it's Brendan here from Crypto 101 and welcome back to another Coinbase tutorial. And in today's video, we're going to be learning how to trade oil futures on the Coinbase exchange. Now, this is a relatively newer feature that Coinbase has added, which allows users to trade not only on leverage, but other assets besides cryptocurrencies. So if that interests you, all we ask is a couple of things. Like the video, smash that subscribe button, and of course, tune on in because we got a lot more Coinbase tutorials coming your way. So let's go ahead and kick things off here. I'm going to bring myself off the screen so that we can see all this a bit more clearly. And what you need to do as part of step one is go down to the bottom left-hand corner of your screen and click on the advanced option. Now, this is going to bring you to a different interface of the Coinbase exchange called Coinbase Advanced. And from here, it's going to allow you to trade futures contracts. So I'm going to go over to the futures options on my left-hand toolbar. I'm going to click on it. And then I'm going to go over and make sure that I have oil selected. Now, you'll see that there's a lot of options to choose from. In fact, there's different months and all these crazy things that you can look at. But all that you need to do over here is type in the word oil. Now, once I do this, I'm going to see that it really narrows it down to a November version, a December version, and a January version. Now, the other two are in view only, and typically you're always going to want to pick the one that you are in, like the month that you're in, for example. So I'm making this in November, so I'm going to be choosing the November contract. Now, once I have this selected, I can go over here and see what the price of oil is trading at. I can even adjust the time frame in the chart if I want to get a little bit more of a bigger or smaller picture. I can see the order book on the right-hand side over here, as well as the trade history, and then I can actually even view how much these contracts cost to purchase. So I can go long or short. Long means that I can bet that the price of oil is going to go up, or short means that I can bet that the price of oil is going to go down. But instead of owning shares of something like this, you're owning a contract that is going to cost you a set amount of dollar amount. So, for example, an oil contract over here in the margin required section is going to cost me $85.58 per contract that I want. So if I want to increase this position and maybe I want to buy 3 shorts or 3 longs on oil, then I can go ahead and do that. And now my margin required, or my cost, is going to cost me $256.70. And so you can scale this up and down as you please. However, it's important to understand what the multiplier is on something like this, because the cost of these contracts and the leverage can vary a little bit over time. So if I'm buying $85 per contract of oil and my leverage is my leverage is 8.5 times, what that means is that it is multiplying the volatility of this position by 8.5 times. So if the percentage of oil moves, let's just say that this thing moves 1% to the upside, well, that would mean that I'm making 8.5%. And that for every 1 contract of oil that I buy, even though it only cost me $85, I am getting a notional or a paper value of just over $727. So it can increase your winners, but it can also drastically increase your losers as well, which makes it a double-edged sword. So if I want to buy a contract, my favorite thing to do on these futures contracts is to use limit orders to make sure that I get filled at a good price. Sometimes there can be a bit of a spread here, like you can see that there is right now. But this can vary. Again, depending on the liquidity in the asset, there can be a spread in between the buy and the ask prices, or the bid and the ask. So what I want to do is say, hey, you know what? I want to buy a contract over here at $72. I don't want to buy it all the way at 72.7. So I'm going to place an order down here to see that, if the price pulls back, then I can get filled a little bit lower. So what I'll do over here is I can either click on the order book and say, hey, I want to get filled at $72. And I can click on this and it is going to change my limit price. Or I can just type it into this box and say I want to get filled at 72.00 for 1 contract. Now, what I'm going to do over here is go ahead and just click buy if I want to go long, right? Because I'm on the buy long option. So I can click buy now. And now if I go over to my orders and I click this little up arrow, if it's not already showing, I can see that I have an order open for an oil contract at $72, and this is sitting open. Now, if I want to cancel this, I can click cancel all, or I can just, cancel it specifically. But that is going to go ahead and remove this off of the order book. So now my order is gone. So that's really all there is to it. If you want to go short, then you can go over here as well and do the exact same thing. Place your limit order for where you would like to be entered into the position. And then once price gets there, it will fill your order and you're able to long and short oil contracts on the Coinbase exchange. So I hope all of you did enjoy this tutorial. If you did, again, all that we ask is a few things. Number one, hit that like button, hit that subscribe button. We got a lot of great Coinbase tutorials that we're going to continue to pump out over here, alongside all sorts of market updates and podcasts and a bunch of other great content as well. So thank you all for watching, and we're going to see all of you in our next video.